Today, we're going to dive into the topic of immediate annuities, also known as single premium immediate annuities. Now, this is a very important topic for anyone who's considering a stable income stream for their retirement years. So in this video, we'll break down everything you need to know about immediate annuities, what they are, how they work, the pros and cons, and how to determine if they're a right fit for your situation. And if they are a right fit, I'll guide you through the exact step-by-step process on how you can get one, the best practices, what to look for, and what to avoid in the whole process. And if we haven't met before, welcome to Fortune Cookies Financial, where we equip Americans with the right knowledge to create a robust retirement plan. So whether you're near retirement or just starting to think about your future, make sure to subscribe to the channel and like this video if you're interested in topics like this. And if you stick around to the end of the video, I'll share details of a free tool that you could use to help you analyze and secure the best annuity rates. If that's something that you're interested in, make sure to stick around. And without further ado, let's dive right in. The first question you might ask is, what is an immediate annuity? To explain this concept a little bit better, I want you to imagine some of the concerns that you might be having about your retirement. Now, imagine having a piggy bank. You've been filling up this piggy bank for years. But as you get closer to retirement, a few worries might pop up. There's always the concern of, hey, what if my money runs out? It's like having a jar of cookies. You want them to last forever, but if you're not careful, one day you might reach into a cookie jar and find it's empty. And this is a real concern if you're just living off your savings. The fear of outliving your money. So an immediate annuity acts like a magical cookie jar. Instead of risking an empty jar, you're giving your savings to what we call an annuity bank. Then every single month they give you a cookie. Or in real life terms, every single month they give you a set amount of money. It's a way to ensure that you have steady income no matter how long you live. The question you might be asking is, okay, what about inflation? Because over time, things are probably gonna get more and more expensive. For example, like a candy bar in the past could cost like $1, but now it could cost like $2. So if your income doesn't increase, you might find yourself struggling to afford the same things that you used to. Now, some annuities can help you with this too. They could be set up in a way to increase your payments over time. We'll talk more about this topic later in the video. Another concern that you might have for your retirement is the complexity of managing your own investments. The last thing you want is to stress about the fluctuating market, the finances. What if it goes up? What if it goes down? What if you lose all your money? So if you don't want to stress about your finances, or if you don't feel confident in managing your own money, an immediate annuity can help. Because essentially what you're doing is you're handing over this task of managing your own money to the annuity bank and let them handle it for you, giving you peace of mind and more time to enjoy your retirement. So as you can see, an immediate annuity solves several problems. The fear of running out of money, the challenges of keeping up with inflation, the stress of managing your retirement savings, giving you financial stability in your retirement years. So now that you know what an immediate annuity is, the next question to ask yourself is, how does it work? Now, if you think back to our piggy bank example, let's say you've been saving for years and you end up with an amount of money. What happens next is you take this amount of money and you annualize it. Basically, what that means is you hand it over to an insurance company, also known as buying an annuity, by making a lump sum payment. The insurance company then takes this pot of money and agrees to pay a certain amount every single month. Now, this amount can depend on several different things. For example, how much you put in it, the current interest rate, your age, the types of annuities you choose. If you want more information on this, make sure to stick around to the end of the video where I'll share with you the free tool. Let me give you an example real quick here. Imagine your retirement pot is $100,000. You use this $100,000 to buy an annuity. What happens next is the insurance company uses different factors like your age, the rates. They're gonna pay, let's say, $500 every single month for the rest of your life. So if you think about it, it's almost like turning this pot of money into a predictable monthly paycheck. But here's another concern. What happens if you pass away too early into the plan? I mean, what happens if you don't get your money back, right? Some annuities offer different options for you in case of a premature death. For example, you could have that money paid to your spouse or your children. Now, I know there's a lot of different options here, which is something that we're gonna explain later in this video. Just know that not all immediate annuities are the same. It really depends on your personal situation and your goals during retirement. So as we're learning about immediate annuities, it's important to consider both the pros and the cons to see if this is something that fits your retirement plan. Let's talk about the pros of immediate annuities first. The first pro is a reliable, lifelong income stream. It's almost like a financial fountain that never runs out of money. That's what an immediate annuity offers. It's a reliable income for life, ensuring that you have a steady cash flow throughout your retirement. Number two, simplicity and peace of mind. And again, annuities take the complexity out of managing your own investments, removing your day-to-day stress of managing your own investment decisions and market volatility. Number three, tax efficiency. One of the biggest benefits of an immediate annuity is their ability to grow on a tax-deferred basis. Depending on how you structure your annuity, you may find a lot of benefits when it comes to tax efficiency. And finally, it's just budgeting made easy. Annuities provide a predictable income. You know exactly how much money you're gonna get each month, which makes financial planning easier and more manageable. Now, what about the cons of an immediate annuity? The first con is liquidity. Once you buy an immediate annuity, accessing your lump sum or investment becomes hard, if not impossible to do so. This means that you can't just pull out all the money in case of an emergency. Some annuities offer features that allow for emergency withdrawals or partial cash outs, providing more financial flexibility. Now, the second con is inflation. Unless you choose an annuity that adjusts for inflation, your regular payments may lose purchasing power. The third con is interest rate sensitivity. The initial payout rate of your annuity is influenced by the current interest rate. If the current interest rate is low, your returns might be less optimal. And finally, we have the consideration of a premature death. Let's say you pay a large sum into an annuity, expecting to receive monthly payments every single year. But what happens if you pass away earlier than expected? So the worry is the money you invested might not be fully paid back throughout your annuity payments. To address this, many annuity companies offer different options that can help. For example, some annuities offer a period feature. This means that if you pass away, let's say within 10 years, 20-year time frame, the payments will go to your beneficiary, like your spouse or your children, until that period ends. Another option is the return of premium feature, where if you pass away too early, the insurance company ensures that the remaining balance of your payment is returned to the beneficiaries. Now, of course, there's a lot of different ways we can structure an annuity to address some of these drawbacks that we mentioned. Just know that for annuities, like everything else, there's pros and there's cons. And the question you should ask yourself is whether or not this is the right choice for you. To answer this question, let me step in your shoes and give you some possible scenarios where an immediate annuity might be a good fit. The recently retired. If you recently retired or about to, an immediate annuity can be a solid choice. Why? Because it gives you immediate stable income. It's like switching your salary into a retirement paycheck that pays you every single month, without worrying about paycheck to paycheck living. Those seeking stability. So if your priority is to seek stable income over risky market returns, an immediate annuity can be a great choice. It's for those who want peace of mind and a guaranteed income stream, especially in the volatile economy. Concern about outlived savings. If you're worried about outliving your savings, which is a concern that many of us might have, an immediate annuity offers a solution. They provide a lifelong income stream, ensuring that you have a steady income flow for as long as you live. It's for those who's not interested in managing investments, because not everyone wants to monitor the stock market, to look at charts ups and downs. If you prefer a set it and forget it retirement approach, an immediate annuity can be a great choice. People with enough savings but seek regular income. Let's say if you save a substantial amount for retirement, but if you want to convert a portion of that into like a predictable income stream, this is where an immediate annuity can help you. Do keep in mind that the decision to go for an annuity or not should be based on your own financial situation, your retirement goals, as well as your need for income stability. Again, our free tool below helps you determine that to find what's the best fit for your retirement. Which leads us to the next question. How do you choose the best annuity and factors to consider? Now, this is not just randomly picking an annuity. It's about finding the right fit for your unique situation. Let me guide you through some key factors for you to consider. Number 1, shop all carriers. Don't just settle for the first annuity or the first annuity provider that you came across. Their rates and terms can vary significantly when it comes to different annuity carriers. It's like shopping for a car. You don't just buy the first car you see without seeing different options. Number 2, type of annuity. Annuities, immediate annuities, they come in different forms. Some offer fixed payments, while others might adjust for inflation. Consider what type aligns with your goals the best. Do you want a stable, predictable income or an income that grows over time? Choose one that fits your need. Joint life or single life. If you have a spouse, if you have children, consider a joint life annuity, which continues to provide income for your surviving spouse, ensuring you and your loved ones are well protected. Now, for structuring your annuity, you have different options to how you want to structure it. Let's say for a set number of years, different options that you can add on. Each choice impacts how much income you get and how long. State of residency. Annuity products and benefits can vary depending on different states, so make sure you understand the specific regulations in your state. Type of account funding the annuity. Are you using a Roth IRA, a traditional IRA, or other types of saving accounts? Depending on these different accounts, your taxation will be different as well. Financial strength of the provider. Lastly, the financial stability of the company that provides you with the annuity is also a big consideration. You want the company that stands the test of time, ensuring that your money, ensuring that your income is well protected. So choosing the right annuity is about aligning with these different factors, as well as your retirement goals and your current financial situation. And as promised, thank you for watching till this far. I've attached a tool in the link below that could help you find which type of annuity works best for you, depending on your retirement goals, your individual needs, and help you find the best rate among all annuity carriers. If you want access to this tool, make sure to click the link below. And if you find this video helpful, do hit the like button. It really helps the channel. Don't forget to subscribe if you're interested in topics like this. If you have any questions or thoughts, feel free to leave it down in the comment section below. I love hearing what you think. Also, be sure to check out my other videos for more tips and insights about retirement planning. Thank you so much for watching this video. Stay tuned for more content, and until next time, take care and I wish you the best.